This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. Looks like most of this appears to be linked to Alcoa having better than expected earnings. However, these improved earnings actually were from reduced expectations. So even though the media is calling this a beat, the numbers really don't seem that good when considering that there have been some substantial reductions in estimates over the last year or so in those second quarter earnings for Alcoa. Also, we are seeing what appears to be the ongoing influence of the Fed's quantitative easing program. The Fed, of course, is buying $85 billion in treasuries and mortgage-backed securities every month. A large portion of this finds its way into the stock market. However, we are seeing the gradual influence of rising interest rates being a negative factor, and I think over time the impact of rising rates will overpower the quantitative easing, especially when the Fed does scale back. Right now, the consensus view is that the Fed will slow down their quantitative easing program at their September FOMC meeting. Over in the currencies, seeing some strength in the dollar index. It was just last week that we saw two-year highs in the greenback. We feel that the U.S. dollar will probably advance from here as interest rate differentials remain favorable to the U.S. dollar. Some overnight gains in the euro currency. This on news that Greece is going to receive some of their bailout money. However, these gains were temporary, with the euro now coming under some pressure. And some additional short covering coming into the Australian dollar. Several days of short covering, but I think we're at an area that will probably halt the short covering gains. I think we can see some pressure later today, and longer term, I think we can see new lows in the Australian dollar, and I believe this trend is likely to last for quite some time. Over in the interest rate markets, futures a little bit better this morning, some short covering gains after the near two-year lows that we saw in Treasury futures last week. We do have supply this week, with the 3-year note to be auctioned today, 10-year notes auctioned tomorrow, and the Treasury then will sell 30-year bonds on Thursday. The short covering gains that we have seen, I think, are just that. The main trend still appears to be lower, and I think within the next couple of weeks we will see a move to new lows for the move in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.